Are you looking for a way to grow your savings and achieve your financial dreams this year? Then mutual funds might be one of the investments to consider if you want a diversified and less risky investment. In this video, we will look into how mutual funds work, their benefits, and how you can start investing while sharing a story that might sound just like your own. Meet Kofi, a diligent teacher in Kumasi. Kofi has a big dream. He wants to buy a house, send his kids to the best schools, and maybe even start a small side business. But saving a regular account just isn't going to help him. That's when Kofi hears about mutual funds, a way to grow his money without needing to be a finance expert. So what exactly is a mutual fund? A mutual fund is like a big money pool where people like Kofi, you, and I put our money together. This pool then invests in a variety of assets like stocks, government bonds, treasury bills, or even international investments. Then a professional fund manager handles everything, making smart decisions to grow the fund. Kofi learned that mutual funds work in 4 simple ways. Let's look into these ways. Investors like Kofi contribute money by buying shares of the fund. Then a fund manager invests this money in a mix of assets based on the fund's goal. The fund earns money through dividends, interest, or capital gains. Kofi's share grows as the fund value increases. Then Kofi can either take his earning as a cash or reinvest them to buy more shares. Now, Kofi needs to choose the right type of mutual funds. Here are the main types of mutual funds available. We have the equity funds. These focus on stocks offering high growth potential but higher risk. A great example is the EPAC investment fund. The next fund is fixed income funds. These invest in low risk assets like treasury bills and government bonds, providing steady returns. Think like Data Bank M Fund. The next fund type is balanced funds, a mixture of equity and fixed income, perfect for moderate growth and stability. Check out First Bank Heritage Fund as an example. Another type of mutual fund is the money market fund. The money market fund is actually ideal for short-term goals. These invest in low-risk instruments like the treasury bill. Stanbic Income Fund is a good pick. The last one is Specialized Fund. This fund focuses on specific sectors like real estate or international markets for unique opportunities. As Kofi explored his options, he discovered that mutual funds have both advantages and disadvantages to consider. Let's look at the benefits of mutual funds. Mutual funds give you an opportunity to invest in low amounts. They are accessible to most people as you can invest in as low as 10 Ghana cedis. Your money is also managed by experienced fund managers who understand the market. They make sure your investment is invested in a profitable market. Fund managers also make sure that your money is spread across different assets to reduce risk. Diversifying your investment is a great way to protect your money from uncertainties and reduce losing all your money at one place. You can also buy or sell mutual fund shares, giving you the access to your money anytime that you need it. You can easily sell your shares when you want to cash out, making it flexible in times of need. Mutual funds are also tax-free. Some mutual funds return may be tax-exempt depending on the type of mutual fund. Apart from the advantages, Kofi also learned the challenges. Some of the challenges include management fees. Fund managers charge fees that may reduce your returns. Depending on the type of financial institution, most of them have fees that may be higher in terms of the withdrawal fees or management fees. Make sure to look into their fees before you invest in any of these mutual funds. Another disadvantage is the market risk. The value of your investment can go up and down based on the market conditions. Most downward trends don't stay for long term unless it's a bad investment. Do not panic. Markets always go up and down all the time, like how stocks and crypto behave due to market conditions. So you need to relax when you see this. Another risk is currency risk. Funds with international investments may be affected by exchange rate fluctuations. Also, the performance variability can be a cause. Returns are not guaranteed and it depends on the fund manager's decision. The decision of the fund manager is crucial to which investments your monies are kept. it's always important to research the mutual fund's performance before you commit. So to pick the right mutual fund, Kofi had to follow these steps. He set his goals, which you also have to set your goals when you want to invest in a mutual fund. He focused on buying a house in 5 years. So he needed a fund with moderate to high returns. Also, he has to assess his risk tolerance. Kofi was comfortable with some risk for higher rewards. He could handle market ups and downs. He checked each mutual fund's objective, past performance, and the fees. One fund stood out for him due to its consistent growth. He made a decision and invested in that with just 200 Ghana cedis and set up monthly contribution of 100 Ghana cedi. Kofi tracked his investment through the investment app and watched his money grow steadily. A year later, Kofi's investment was on track, bringing him closer to his dreams. Diversifying his portfolio also gave him peace of mind during market fluctuations. So if you want to learn where and how to invest in mutual funds, I have the link in the description below for the full video. Mutual funds are a powerful tool to grow your money and achieve your financial goals. Whether it's new house you want to build, education that you want to complete, or your retirement, mutual funds offer an accessible and smart way to invest your money in various markets. Don't forget to like this video, share to your friends, and subscribe for more financial tips like this. Make sure to watch the next video here.